So, welcome. Hi, everyone. Great to have folks joining in for our chapter two of the Escrow webinar series that we started. Last webinar, we talked about Trustee 101, and today we are here to talk specifically about a use case which is gaining a lot of traction, which is basically salary payouts and earned wage access payouts, and the relevance of escrow for that use case. We have with us two very accomplished product leaders to talk about the use case and also about the payment infrastructure behind it. We have Suhrud Karandikar, who is a product leader from Refyne, which is India's leading employee financial wellness platform. And Suhrud leads the entire banking products for Refyne. Suhrud, welcome. Great to have you here and look forward to a meaningful conversation.
Thank you, Aditi. Glad to be here, and glad to use the escrow solution that you have for us.
Thanks a lot, Suhrud. We also have another product leader here, Amlan Chanda. Amlan leads the payouts suite for Cashfree Payments and has a lot of expertise and understanding of how money movement happens with respect to escrows. Amlan, great to have you with us as well and look forward to a great discussion.
Yeah. Hey, hi. Good morning, everyone. Thanks a lot, Aditi. The pleasure is mine. Looking forward to have a very fruitful discussion with Surud and everyone else.
Thanks, Amlan. And for folks who have joined in, my name is Aditi Olemann, and I look after product marketing and strategy for Cashfree Payments. And Escrow is a product which is very close to all of our hearts at Cashfree because we've built it with a lot of love. And we're really looking forward to discussing more about this use case and also getting inputs, questions from folks who have joined in, right? So wherever you have any thoughts, any questions, whether it is about this use case or even ancillary use cases, do put in your questions and we'll try to take them during the conversation, or otherwise we'll try to reach out after. Great. Thanks everyone, and we'll get started with Surud. Tell us a little bit more about Refyne and what it's doing, and also specifically about the escrow use case for earned wage access, because I know earned wage access is one of the key things that Refyne started with as a fintech. You've now expanded to a more holistic solution for employers and employees. Would love to understand what you guys are doing, and also maybe for the folks who've joined in, if you could explain what is earned wage access, what is it as a concept, right? And what are the different models? There are a few models where the employer, can be the borrower. In some cases, it is the employee. So we just wanted to understand how the various models work with respect to earned wage access.
Awesome. So thank you so much, Aditi, for the introduction. So everyone, I'm Surad. As Aditi mentioned, I've been with Refine for a little over 2 years now, and which is a very significant duration given that the company is just a little over 2.5 years old. So we have very rapidly grown to be India's largest financial wellness platform for employees, right? And it has been a beautiful journey for us. It has been a journey with a lot of learnings along the way, and here I'll like to cover basically two things, as Aditi mentioned. Firstly, how did we start? What is earned wage access? Why is it such a big problem statement for the Indian workforce? And then how we have, kind of utilized cash-free services there, and how we have also evolved the product proposition over time to, just better address and better solve problems for our target employees, right? So Refine started, as I mentioned, 2.5 years ago with the concept of earned wage access. The concept of the problem statement is very, very simple, right? I think all of us, especially salaried employees, can sympathize or can understand the idea that uh, we sometimes run short of money in the middle of the month, especially towards the end of the month, and we are, absolutely waiting for that payday to for the salary credit day to come. Everyone is eagerly waiting for that. Money comes in, and then we cater to a lot of expenses. But what happens, in that period, and maybe say the last 5, 10 days of the month, where you really urgently need money, there is an emergency which has come up, and you just don't have enough in your bank account at that point. right? Now, if you see, you say on the 20th of month, you've already done 20 days of work, and your company actually owes you 20 days worth of salary. But you know you will not get it, then you will get it only at the end of the month. And that is where Refine essentially comes in. At any point of time in the month, Refine makes available the salary or a percentage of it that you have already worked for, right? So very simple example, if my salary is 30,000 rupees a month and it is the 20th of the month, I've already worked for and I've already earned 20,000 rupees, right? What Refine does, or what earned wage access does, is that it gives you instant access to the amount of money that you have already worked for, right? So it is a very simple yet beautiful concept that solves a very, very broad use case, right? And what we do over here is that we don't approach users or employees directly. We approach their employers, we approach huge corporates, governments. I'll talk more about that in a minute. We approach them, and they are the first ones, right, to sympathize with this problem of their employees, and then they partner with Refine to bring in earned wage access as a solution for their entire employee base. Right now, while Refine started with catering to a lot of startups, right? At the moment, we have some of the biggest corporates in India on board, right? We have Tata Group companies, we have Aditya Birla Group companies, we have old age pharmaceutical companies like Cipla, and recently we've also forayed into government clients. So now we have two state governments who are onboarded with Refine, and earned wage access and Refine's entire product suite is being offered to employees of two state governments at the moment. So it has been a crazy growth curve for us. Um, One thing that we've realized, I'll just take 1 minute, is that employee problems, right, don't stop at just these liquidity or running short of liquidity solutions. Refine works with employees through through their employment period to just make them more financially aware, right? And to basically help them understand finances better. So we have a big financial education suite. For many employers, we start first with the financial education suite and then graduate on to liquidity. We have savings products, insurance products, all of which are directed to employee financial wellness, right? So while we started with earned wage access, we have graduated on to being a full-fledged employee financial wellness suite. Um, and while we are happy as to where we are, while we have the biggest clients, I would definitely appreciate Cashfree's contribution in that, right? Cashfree basically gave us the list of the entire array of payment products for us to quickly be able to launch not just our flagship solutions, but whenever we had a new feature request, a new model that had to be implemented, we reached out to folks at Cashfree and they enabled us to get the new solution live very quickly with the array of solutions that they have on the platform.
Great. Thank you so much, Surud. And thanks for explaining, you know, what is Refine doing in the entire space of employee financial wellness. I think that's something which is so critical for each one of us. When you were talking about it, I'm sure that many of us could relate, the requirement that each one of us face, right, for some of these things. So thanks for explaining that, and also about what exactly is earned wage access, right? That's super helpful, and I do believe that it's a very growing segment, and Refine being one of the leaders there, we're really looking forward to working together and continuing to grow this segment with you. So now talking specifically about a little about the payment flow, right? You talked about how we at Cashfree have worked together with you on many of these use cases. Amlan, coming to you on that, right? From a payment perspective, earn wage access as well as payroll and HRMS are segments that have been growing very rapidly, right? We have a lot of large players such as Refine in the earn wage access and financial wellness, but also in the payroll space there are other large players also who are working and growing this segment. From a payment perspective, help us understand, and from a payment product perspective, right? What are those key asks and key, I would say, offerings that are important for these players in payroll, in earn wage access across the board?
Okay. So thanks a lot for that, Aditi. Right? When we look at payouts in general, right, we are usually thinking around two dimensions, right? The first one is the success rate, right? If I'm initiating 100 payouts, what proportion of those are actually landing with the beneficiary, right? The second is basically the concept of TAT, right? How long is it taking for the money to actually reach the recipient, right? In case of wages, what we have seen is the SR plays a more critical, crucial role, right? Because there is a lot of anxiety associated with getting the money on time, right? Surud was talking about this liquidity crunch, and in that, if you are expecting a payment today, right, and for some reason because of the ecosystem challenges it gets delayed, right, it creates an unnecessary burden or anxiety for the beneficiary, right? So across the board, there is a lot of work which we have done to ensure that the success rate is as high as possible, and the transactions which go into pending can be closed as soon as possible, right? So the first thing we do is we do automated retries. Our system automatically retries for certain categories of technical declines, right? So the merchant need not worry about that, right? And this works basically on the merchant's own account, right? Our system does 4 levels of recon, right? When we have initiated a payout, right? And what we are trying to do is, as an off chance, as I said, right, so if the transactions are going into pending, we have 4 levels on which we try to close that as soon as possible. Our system automatically every 30 seconds is monitoring the uptime and the performance of the partner bank in which the merchant has the escrow account, right? And in case we see that the pendency or the latency is increasing, right, automatically our system will create unscheduled incidents and sort of start queuing the payouts, right? Because we don't want to push payouts during that time frame, because there is a very high probability that they will get stuck or go into pending, right? We give full visibility to this to our partners, to our merchants, so that they can understand on an average how their gateways have been performing, right? Because we do payouts at such a large scale, right, our systems are also monitoring the beneficiary bank performance at any given time, right? Because we are pushing so many payouts. This also is given as APIs, like as webhooks, and pull APIs to our partners. They can further take decisions based on that, right? And the last part, I would say, is observability, right? Because we try to give as much detail and as much useful, actionable insights to our partners, right, with respect to what is the TAT which is happening during the day, which hours the TAT is higher, right? What error codes, what failure mode reasons are sort of basically are increasing, need to be looked at, right? So with all of this, what we have been able to do is consistently we have been able to outperform a single gateway on its own, right? And a lot of work definitely has gone, right. So that's roughly what our experience has been with respect to wages in general.
Amlan, thanks so much for delving deeper. In fact, I think from a business perspective, right, why are these aspects important? Why is success rate important? Why is efficiency of the payout important? Because in many cases, it's not just the employer who is doing the payout. There are platforms who are managing, let's say, hundreds of such employer payouts, right? Or salary payouts on behalf of employers. In which case, the asks for each employer might be different, the frequency, everything could be very, very different. So the complexity comes with the scale, right? Even for that matter, Refyne, for example, works with a lot of different employers, right, for the use case of earned wage access. So in such a case, it's even more important. Imagine payroll for one employer itself is so critical, and now you're doing it at scale for hundreds of employers, right, as a platform. I think that's where the working with a TSP really adds that value versus kind of enabling this directly via banks, right? So thanks for sharing that, Amlan. So coming
So
specifically to your use case that Refine has, right, for earned wage access, it's a escrow has emerged as an instrument of choice for enabling such use cases. Overall, I think with money movement becoming something which is very critical from a compliance standpoint, it's important to have instruments like escrow which enable that, right? And especially earned wage access has multiple parties involved. There is a lender, right? There is the employer, there is the bank through which money movement is happening. In some cases, there could be a requirement for trustees also. And then, of course, there is the employee, right? So just wanted to understand from you, how do you enable this in a seamless manner using escrow as an instrument?
Right, absolutely, Aditi. So, so if you go back, say a couple of years, right, when we started using cash-free, the disbursals were essentially made through a cash-free account, right, which is a very standard payout model that you have. But then September 2022 hit all of us, right? The digital lending guidelines came out, and the guidelines very clearly specified that money must move from the bank account of a lender to the bank account of a borrower, right? No intermediary, not even payment gateways. Or payment gateway accounts could be used for these disbursals. And this is essentially where escrows, right, and the solution that Amlan was just talking about became so useful for us. So one thing that we could do with cash free is that we could essentially get an escrow opened, right, with multiple parties over here, because there is the lender, as you said, there is the employer who in certain cases also wants to fund a part of the advances to the user. It required us to kind of create a new system where there were a new set of accounts through which all our disbursals were routed, right? And there essentially the escrow account solution, right? Being able to just quickly open that account with not just one bank, but now multiple banks, as you are aware, what Refine does, and then get both the dispersal side enabled through that, and also the collection side of money coming in, right? Because now that money coming in into the account of, say, Refine as an LSP was also not allowed. So getting that money in into the escrow was also a very big part of the solution that was provided. But just to highlight over here, right, while maybe none of this was required before September 2022, and a lot of this could be done through accounts of payment gateways, the new regulations, the new guidelines that have come in uh, require all fintechs and lenders to operate in a certain way, right? And managing the compliance of that becomes super, super important, right? It is an existential thing for every fintech player. And the escrow solution essentially solves the compliance part, uh, giving the same flexibility of cash free products that we used earlier anyway onto a new system, a new way of doing things, a new account through which things were being done, right, in a completely compliant and seamless manner.
Got it, got it. Thanks, Sunil, for explaining that. I think there's a question also, a follow-up question that has come up on whose
Absolutely.
name is the escrow account opened in such use cases.
Right. So I'll talk about two different use cases over here, right? The kind of flexibility that you have with an escrow is that you define three parties, and Amlan can talk more about it later. But you can actually also define the name of the escrow account, which is also defined in the escrow agreement, right? Now, one thing that we want is that when the primary lender essentially is an NBFC partner that Refine has, what we prefer is that the name of the escrow is the name of the NBFC that comes in over there, right? Whereas when, say, there is an employer partner who wants to use it for both funding the earned wage access disbursals or salary payouts to its employees, we also have the flexibility of adding the employer name to the escrow over here. So while there are three parties, the great thing about escrow is that um, you have some flexibility in defining the name of the escrow account. And this is, as you're probably already aware, very significant, because when money flows from the escrow account to an employee's bank account, it is this name of the escrow that will appear in their bank account also, right? So having that familiarity, maybe in terms of adding the name of the employer over there when required, NBFC, is something that escrow models generally support. But Amlan, if you want to add more to that.
Yeah, no, I think you have covered pretty much all of it, Surud.
Yeah. Yeah, I think there is always flexibility of the primary, who is the primary party and the secondary party, depending on use case. cases, the primary party can be X or Y, right? In the three-party agreement. Of course, the third party is always the bank, right? Now coming to you, so in case of earned wage access, like Suhrud mentioned here, there's the employer, there's the NBFC, and then bank, right? These are the three parties. But then for payroll use cases, right? Normal payroll use cases where there is no lender involved. Typically, let's say if there is a platform that is doing payroll on behalf of employers, right? In that case, typically, there is a role of a trustee that comes in, right? So Amlan, just wanted to kind of get your insights from you on how does that work out, right? So when there is a so in that case, the three parties are the platform, the trustee, and the bank, right? What is the role of the trustee? If you could throw some light on that. We did talk about trustee 101 in the last conversation, but this is specific to this use case, so wanted to kind of get your insights on that.
Sure. Aditi, as far as trustees are concerned, right, practically they can be in one of the two roles, right? They can either be in a monitoring role where they are basically supervising the money coming in and the money going out, right? Or for certain particular use cases, right, it is mandated that the trustee has to be in an operating role, okay, where it only monitoring is not the requirement, even the disbursals, right, ideally have to be initiated by the trustee. Now in case of wages specifically, right, the escrows which are open for trustees, usually the monitoring role suffices, right? And even in case of monitoring, a post facto kind of monitoring is sufficient. The way it works is at the end of the month, the trustee will basically sample transactions, right, and verify those transactions, and based on that action, right, they're going to share their observations. Usually they are looking at ticket sizes, usually they are looking at frequency of payouts to individual beneficiaries, right? So they're doing this, and if there are any observations, they basically share, right, and those observations have to be implemented. Otherwise the trustee will give you like a certificate saying I have validated and it is looking fine. In case of the operating model, as I said, there are certain specific use cases for which the trustee has to be the one who is giving the final go ahead, at least before the disbursal happens.
Absolutely. So, for example, in a buy-sell use case, right, where there's a buyer and a seller and there is a lack of trust. So, for any transaction to happen, the trustee has to have an operating role because the trustee is acting like the party that is kind of releasing the funds, right, when the buy-sell has happened. Whereas in case of a payroll, there's already a contract in place between, let's say, the platform and the employer that on behalf of the employer, these payouts are happening, right? So, their trustee does more, like you said, a monitoring role, right?
Right.
Again, very use case dependent. If there are unique use cases that startups come up with within payroll, there could be an operating role as well.
Yeah.
And that's where, we can support that, right? We can support either a monitoring or an operating role with our trustee partners as well. Thanks for that insight, Amlan. I think there's a question here about in case of a dispute, what is the process for resolution when salaries are held in escrow? We don't have any lawyers here in the panel, but I think from our operational understanding, the dispute resolution is something which is already kind of put in the agreement itself, right? In XYZ scenario, what will happen? Of course, there's also it can go into litigation if both parties don't agree, right? So all of those things need to be captured in the agreement itself, and on the basis of whatever has been signed between the parties in the agreement, the resolution happens according to those steps, basically, right? So that's sort of like a very vanilla answer, but I don't know, Amlan, Suhrud, if you want to add on to that in any way.
Not
No,
yet. I
yeah,
mean, we haven't had any disputes yet, luckily, touch wood. But I do know that when the agreement was being evaluated, our legal team had evaluated it from the perspective of disputes being raised also. And while that is
correct.
a very relevant question, while I know that the escrow agreement covers it, because I'm not aware of the legal clauses there, will not be maybe able to answer it from a legal standpoint, but I know that it is covered in the agreement for sure.
Correct, correct. I think it is even more, the thing to be noted here is that it's even more important for the escrow agreement to be, all agreements agreements are important, of course. But in case of an escrow, it is super important because escrow is happening because there's a lack of trust, right? Escrow as an instrument exists mostly because there's a lack of trust between parties. So it's super important to bake all of the scenarios, right? And in each scenario, what will be the resolution that needs to be baked in. If the question is whether the trustee will take a stand in that case, trustee's role is not to come in during legal, let's say, disputes, right? They are a neutral party that will enable a set of instructions that have been pre-agreed with them, right? So that's their role. It is not their role to kind of come into a legal dispute, right? And Surut, coming back to you in terms of the use case and uh, the escrow enablement, right? Escrow, of course, the account always belongs to a partner bank, right? But then there is a TSP layer that can enable a set of things on top of that, right? And like you mentioned earlier, Cashfree and Refyne have worked together on a lot of these use cases. So, from your point of view, what is the benefit of working with a TSP rather than just working with a bank directly for the escrow process?
Absolutely, absolutely, Aditi. So, one advantage definitely is integration, right? Be it any product, be it your disbursals, be it your collections. If you have to enable it with a bank, you have to integrate directly with the bank, right? For us, the beautiful thing was, right, that because we were using cash-free payouts before, we had an integration which was already in place, right? And when the whole digital lending guidelines came in and we had to change the account from which money was being disbursed, there was absolutely no extra integration effort. It was simply opening the account with the bank, getting APIs enabled on that account, both of which cash free assisted with, right? And then once we got those credentials, cash free just configured them at their end. And all we had to do was we just had to keep using the existing integration. There was no developer effort involved from our end over there. And this kind of extends beyond, so first we went live with one account, right? And then one problem that we started seeing there was that there were times when that bank was down and offline, right? And then that would essentially be a limitation of one bank per se, that if it is down, essentially for that period your business is paused. So firstly we did suffer a bit due to these downtimes, but then what we did was we just went to another bank, right? We opened an account, got the APIs enabled, right? And the same thing essentially happened there too. Key, you just got the credentials, you inserted it in cash free, and with absolutely no incremental developmental effort, right? We were able to go live with two bank options for routing money. And this is the biggest benefit, right? Because now you have the option to open accounts or escrow accounts not just with one bank with whom maybe you have an integration or relationship, but you could actually diversify, and you could go live, and you could start disbursing through accounts in multiple banks through APIs without any additional developmental effort at your end, right? And I think which is what any fintech would want to do, right? Refine doesn't want to solve the payments problem, right? Or does not want to spend a lot of time in payments integration. We want to concentrate on building the best possible financial wellness solution for employees, right? And the complexities of integration with banks, of using multiple banks at the back end, that is left to cash free. And to me, that is the biggest advantage of using this solution with cash free.
Absolutely. I think, you don't need to go through, like you said, the hassle of each and every integration. It's, unified and it's much more simplified, right, in terms of going live. Amlan, you want to add on to that? Beyond that, from a TSP perspective, what else are we working on? What else are we, providing? And what does a TSP kind of add as a value add on top of the bank?
Sure. So let me first answer that in general, right? Because earlier I talked about the two dimensions of SR and TAT, right? I think one very important thing for us is to also have additional safeguards in our system, right? Because these are disbursals, loans, salaries we are dealing with, right? So our product starts with the bare basic. You have multiple levels of maker and checker. on the dashboard before you sort of do the final dispersal, right? But that's the run of the mill thing, right? What we also support is, even if our partner is using APIs, right, like Surad was saying, right, we still have can enable a maker checker, with the maker being the API and the checker being a person who is logging into a dashboard, right? By the by, now we also have the capability of having both the maker and the checker via API, right? So a lot of these things we can sort of react much more quickly to the needs of our partners as compared to a bank, right? So that is one thing we pride ourselves on. Coming to escrows in particular, right? We are talking about like escrows, right? Not only do we allow like connected dispersals at scale, right? What we also allow out of the box is that our partners or our merchants can sort of programmatically create ledgers or sub accounts on top of their own escrows, right? So you can programmatically create these accounts, right? You can programmatically create virtual bank accounts attached to these ledgers, right? You can create virtual payment handles attached to these ledgers, right? So that takes care of the pay in part, right? So if a payment is made to a particular virtual bank account, we get the API call, so we know our system is aware of the payment coming in, and the settlement happens to the underlying bank account, right, which belongs to the merchant, right? And with these ledgers or with these sub accounts as a reference, you can then initiate payout, right? So that completes the whole life cycle. So if there are use cases like the partner does not want to invest a lot on tech, right, they can just out of the box use our ledgers, our paying capability, payout capability, right? And then we as a platform ensure that there is recon happening, automated recon, manual recon happening for the pains, there is recon happening for the payouts, right? So those are some of the things we do, particularly with respect to escrows, right, where a lot of flexibility is given, where you stay compliant because the account is in your name, but then on top of that, the whole stack is sort of running.
Absolutely, Amlan. And there are a couple of questions that have come in. I know there are a lot of questions. We will try to answer a few because we are also a little towards the end of time. There's one around, last minute changes to salary amounts such as bonuses or deductions. How does an escrow deal with it? So I think it's more about, how through APIs there can be actually an integration. So, Amlan, you want to maybe comment on that? So essentially, it's not always a fixed amount, right? There's a variability in what needs to be paid out in terms of bonuses, deductions, etc. From an escrow standpoint, what is the application of that?
So I'll add first, and then I'll also let Suhrud talk about it, right? So we are the payment leg, and we provide the flexibility of APIs or bulk uploads and all, right? The computation is actually supposed to be done at the partners or the merchants end, but the point is that once those computations are completed, right, and a final amount has been arrived at, then from that point on, you can initiate the payout. And as I was saying, there are multiple levels of control, right? But the point is that the majority of this computation actually lies with the merchant, right? So we make sure that we are going to hold the transfer till we get all the required approvals, and then we are going to let go. And from that point on, it's our responsibility to sort of fulfill it, right? So Surad, if you can shed some light on how you guys handle it on your end, that will be great.
Absolutely right. So essentially, as Amlan said, right, the role of cash free or a payment aggregator here is that we tell them, hey, this is the account, this is the amount that has to go to this account, and we expect them to fulfill it fast and with a very high degree of success, right? But the logic as to which account does the money go to, what is the amount that has to be paid, this is where Refyne's integrations with its employer partners come in, right? Um, we are deeply integrated with our employer partners, and this information essentially comes from there. It comes into the refined system where we again validate that information, right? Even so, for example, we if we say that this is an employee named Karthik and this is his bank account, we actually do enable, we do verify the bank account to see whether it is already whether it is registered in Karthik's name. Once that verification is done and on the payroll date, yes, we would trigger the dispersal, or we would trigger that instruction to Cashfree saying that, hey, please disperse, say, this amount to this bank account. And Cashfree essentially gets that done for us. But deciding the account, deciding the amount is very much the responsibility of the business or the merchant in this case. So also I would like to add just one more point over here, because there was a question around this. While a normal account can be operated in any way, right? Like a savings bank account, you can make whatever transfers you want through it, right? Anyone could pay to it. Escrows essentially have a use case defined in the agreement, which is something that Aditya and Amlan were also alluding to earlier. And to me, it is as simple as, if the use case is defined in the escrow agreement, you could use the escrow for that. If it is not, you just cannot use the escrow for that type of disbursal. So this kind of setting up very particular use cases is actually what differentiates an escrow account, that we know that this account is set up and that it will be used only for this particular use case or set of use cases. And I think which is why dispute resolution would also be easier, because it is set in the escrow agreement as to what it can and cannot be used for.
Correct, correct. And this end use case is very clearly defined in the agreement itself, right? So essentially, and this agreement is signed by the parties along with the bank, right? So, like you said, there cannot be a violation of. It makes it more compliant because it's very clear what is the end use case for which the escrow is being used, right? I think there's one more question here around the the party's name being showcased, right? I think you had mentioned that, Surud, on the employer's name being showcased when a payout is happening. So here the question is about whether this happens only in case of hard escrows or also in case of digital escrows. Amlan, do you want to take that? And maybe Surud
Yeah,
can add.
I can take that, right. So in case of hard escrows, definitely it is a possibility that the name will reflect. In case of digital escrows, right, unfortunately that's not the case in, like, most of the times, because it also depends on the mode of payment we are using, right. So in case of NEFT, we might pass remarks and those might show up on narration, right. But in case of, say, IMPS, the narration is completely dependent on the Benny Bank, right, in terms of how many characters they will show, whether they will show remarks at all or not, right. So by and large, as a rule of thumb, on digital escrow, the name, the ability to customize the name is very, very limited.
Absolutely, yes. I think there were a couple of questions around who is the again the account holder in case of the earned wage access use case. We answered that question, but again, kind of reiterating, it is the NBFC. I think there was a question around whether it's the NBFC who signs on the account opening form, right? So the answer to that is, on behalf of Surud, I'm answering that it is the NBFC who is party to the escrow who signs the agreement, right? And that's, they are sort of liable for the money movement within the escrow as well, right? So, so that was the other. I think a couple of questions were around that as well. So I think we've run a little out of time as well. So with this, we'll close this, and if there are certain questions that are unanswered, we'll try to kind of get back to the folks as well. But thank you very much, Amlan and Surud. I think we really went first broad into understanding what is the landscape and what is happening in the space of employee financial wellness and earned wage access and payroll, right? And then we went deep into how the use case applies with respect to escrow. I hope it was useful for folks who have attended and folks who would also maybe going forward watch this video. So thank you, thanks both of you, thanks a lot, and look forward to more such engagements going forward. Thanks, Amlan. Thanks, Surud.
Thank you so
Absolutely.
much.
Thank you. Thank you so much, Aditi, Amlan, and
Bye.
Greta.